So, I backtested my strategy for 1 year inside of FX Replay. I'm going to take you through the statistics, what I did good, what I did wrong, where I can improve on, and I will show you exactly how to trade it yourself. So without further ado, let's get into the video. Okay guys, so as you can see right now, we are inside of the statistics of my current strategy inside of FX Replay. As you can see, we have some impressive numbers on the screen, but I would say they are very realistic. Some things that you need to know is that they're only taken inside of the time zone that I also trade in. They always have the same stop loss and take profit logic behind them. And as you can see, we only took 130 trades inside of a year. So that's roughly 1 trade every 3 days. First of all, we have almost a 40% win rate. This is something that I want to see increase going into the next year. And I would say this comes very closely to my own trading results. Some months I'm hovering around 50, but I would say overall is around 35-40%. But what makes me profitable is that I'm going for higher risk to rewards. This can of course also be the reason for that lower win rate. But as long as we're profitable, it doesn't really matter. So a 71.8% return over 12 months, that's roughly 6% a month. So that's very healthy. A 39.5% win rate and 130 trades. So right now, the juicy statistics. We have an average risk reward of 2.8. Like I said, I'm going for a bit higher risk rewards. So most of the time, as you guys know, my baseball hitters are the 2R trades. But I also have trades of 9R inside of this backtesting session. And that of course takes that average a lot higher. Now, funnily enough, and basically something that I can work towards, is that my ideal average risk reward is 4.7. So what does this mean is that I'm closing my trades at a 2R, but my trade runs to 5R on average, right? So that's what this means. Then what I could have profited or break even is whenever my trade is above 1.5R, but I don't put it on break even or take profits, I still lose the trade. This is where these stats come from. Very important to tell you is that I didn't trade manage in this strategy. So it is just stop loss or take profit, nothing in between. Then my average duration is 11 hours. As you can see, this is more of a day trading kind of style, almost going to the swing trading. Some trades take longer than a day, some trades take only 2-3 hours. So that gives that average duration of 11 hours. Then total trades and the account age, as you can see, 365 days is exactly a year. Then total winners was 51%. My best win was 6.2%, but FX Replay calculates this on your current account balance. So in reality, it was 9.3%. And my average win 2.2, so this will probably also be a bit higher. Then the average duration of my winning trades, noticeable, a lot longer than my average duration overall, right? Then my average win streak is 3 and my max win streak is 7 trades in a row. Then my total lose was 78, my risk was 1.5%. So again, I think this is something to do with being this account balanced. Then my average loss is 0.78%. Maybe there were some trades that were closed early or that's something glitch or something. But normally it was just stop loss or take profit, 1% risk each trade. So I never risk more than 1% or never risk less than 1%. Then my average duration of my losers are 5 hours and 59 minutes. Very noticeably is that my losers are a lot shorter than my winners. Average loss streak is 3.8 and my max loss streak was 8. So if you're risking 1% and your max loss streak is 8, you are losing 8% in that certain period of time, right? So this is something that will be very difficult for your psychology to handle, because you will start tweaking your strategy, you will start doing weird things to try to make up for this. You start risking more, you start risking less, you start taking different entries, you start taking different stop losses, take profits. And this is where it goes wrong. And this is where you lose your edge, because you are changing your edge and you are changing your strategy. You always need to keep going on with your current strategy. You always need to keep persistent with your strategy, even if you're losing 8 in a row. And this is a backtesting session, and I would say for me in real life, my biggest losing streak is like 15 or 20 trades, guys. And most probably if I would have kept my psychology in check, it would have been something like 8 or 5 or 10. But just because my psychology just goes the wrong way at that moment, it becomes a lot more than 8. And this is something to work towards, and this is something that I'm honest about. Not even one profitable trader does not occur losing streaks of more than 5 trades or more than 10 trades. This is just a normal thing, guys. And this does not mean that your strategy is bad. Maybe the market conditions are not that great for you at this moment. Maybe your psychology is not in check. There are so many different factors that can create this losing streak. But it is very important to keep persistent with your strategy, to get back on track, and to keep yourself accountable and disciplined to always execute the same thing. Now, on performance per day, as you can see, Mondays. This is something that I always see coming back in my backtesting sessions, is that my Mondays are by far my best days. And I've always learned to skip Mondays, because always everyone is saying that Mondays are just so bad and they're so difficult to trade because everyone is going out to weekends, low volatility, blah blah blah. As you can see guys, it is just my best day by far, almost twice as big as my second best day, and I'm winning almost 3 times as much as I'm losing on the Monday. The Wednesdays are good, the Thursdays are good, so the Fridays are also very good. I would say my worst day on this one is maybe the Wednesday, and the Friday. They're still good enough to include inside of my strategy. So for example, if you're seeing that you're losing more on a certain day than you're winning, I would say backtest this even more so that you're really sure about this. And if you can say, yes, this day is just not working out for me, just leave it out of your strategy. Just don't trade this day, and you will see that you will leave the month with a lot more profits than you would do if you would include that day. Because this is something that you need to understand guys. Winning is one thing, but also keeping your profits is the second one. If you can win and if you can keep your profits, this is what will pay you at the end of the month. If you win a lot, but you also lose a lot, you can still be that break-even trader or not being profitable at all. And this is lastly the performance calendar for the whole year for the strategy. Also my performance per month, as you can see, we started off January with 7%, then February we had a 2.5% month, on March we had a 2.8% month, on April we had a 7.5% month, on May we had a very incredible month, it was an 18% increase month, then on June we had a roughly 4% month, on July a 6.3%, then August and September were red for us. Again guys, like I said, these months will be very hard on your psychology, and also in real life these 2 months are the most difficult months for me. I don't know what I'm doing wrong, but I know that it is a volatility thing. Traders are leaving on vacation, everything like that. So right now, this year I did not trade August, and last year also did not trade August, but I will trade September this year just to see how it goes. Then October we had a 2% increase, November we had also a very good month, a 9.7% increase, and December we closed the year with a 1.5% increase. So that gives us a total of 71.8% increase for the year. So right now let's show you the strategy real quick. I'm just going to continue where I left off. First of all, I'm going to be looking at the higher time frames. What is structure doing? Where are we going? So as you can see, we had a very big increase from these lows right here. We had our pullback right here. This pullback was up to the 61.8%, and after that we were going inside of an uptrend on the 4 hour at least. So the 1 hour is also going in that uptrend, so I will be looking for bullish trades. So now that we know that, we can go to my time zone to trade in. So guys, very important for you to notice is that my time zone is on GMT +2. This is where I live, this is Brussels time zone, and that is right here. So now what I do is I take basically the current price select that we're in, and we're going for bullish trades. So I'll be taking my Fibonacci tool right here from the low to the high, and I want to see price come back inside of the 61.8 area and the 78.6 area. Then I want to see the zone overlap with the point of interest area. This is an order block or this is a fair value gap. In this case, we can use this as an order block. Then we scale down to the 15 minutes and we are just waiting for price to come to that zone. As you can see right now, price came down to that zone, but we're not entering right away. Now we're scaling down to the 5 minute and we want to see an impulsive move the other way around. So we want to see a bullish impulsive move displacing higher. And why do we wait for this, or why do we want to see this? We use this as confirmation. As you can see right now, we're just going lower and lower, and this is not confirming for us that this is the right zone to look for. Also, this is not displacement, right? This is what displacement looks like, so we want this to happen in the other way around. As you can see right now, we are having some displacement higher. So what we are doing right now, we are going to the first fair value gap that we encounter. We're going to take an entry from there. We're going to put our stop loss underneath the lows, and we are going to target the liquidity that is above here. So basically liquidity will be the first significant higher low that you encounter, and depending on which direction you're trading on, of course. So now we're risking 1% as the strategy was just 1, and let's see what's going to happen. We are tapped in, we're struggling a bit to go higher, and we are tapped out. That's no problem at all. As you saw, my win rate was about 40%, so we're not winning all of them, of course. So now I'm going to wait, and I'm going to go to the next day to take a new trade. But as you can see, we were stopped out right here. Very slightly, it took liquidity, and we were the liquidity in this case, and then it shot higher. That's very unfortunate, but the strategy does not include liquidity or waiting on liquidity, so this is just the losses that you need to take. Okay, so as you can see right now, this is the current impulse lag without basically any significant pullback. So we want price to come back inside of this range right here. We also want it to be overlapping with a fair value gap or an order block. So this fair value gap right here, also an order block, so this will be the perfect place for us to buy. Let's say this place fails, and this is always the checklist that I have. We're always going for the first point of interest that we see. If that one fails, we're going for the next one, right? So in this case, we don't have another point of interest area. I only see this liquidity down here. If we see price come impulsively out of here we take our trade. Otherwise, we want to see price come impulsively out of here, we take our trade, and otherwise we are shifting biases. So this is basically the plan for this trading session. So right now it is London session, and I think it will take a long time for us to go down. Also, something to notice, I'm not trading downwards to the zone. I'm only taking it the same direction as the trend. So right now, price has come to our zone. Let's go to the 5 minutes. And as you can see, we don't have a fair value gap yet on the 5. So we're waiting for that to happen. We want it to be a bullish fair value gap, like this one, very, very impulsively, taking our trades, putting our stop loss underneath the lows. We will target the highs right here, and this is our trade. So let's see, place the order, 1%. We're stopped out immediately. So right now, what did I say? We are waiting for price to take out liquidity down here, or to give us another reaction in this point of interest area. So let's go to the 1 hour and let's just, okay, it takes out the liquidity immediately. Now we do want to see that reaction, otherwise we are going to shift biases to bearish. Since then the direction would have changed because market structure has changed at that point. So let's wait on the 15 minutes and let's see if we are getting a reaction out of here. We are getting a bit of a reaction, but it's not really bullish, I would say. We can even go to the 5 minutes. There was a fair value gap, to be honest, so that could have been an entry. But let's wait a little bit more for a really great one like this. Yeah, this will be a very great one. Then we're taking our entry just on the top right here, stops underneath the low, and we're targeting the same that we did right here, the highs. We're placing the order 1% risk. We're tapped in. Okay, now we need it for it to go higher, and there we go. Take profit has been hit. Okay, so we're a bit further in time since there were literally no entries at all for us right there. So right now I see price being very impulsively to the upside. Remember, we want to see price lag and want to see pullback happening after that so that we can trade that. So let's wait for price to create that pullback. If we are even going to create it, because maybe even we are going to go higher again, but we are creating the pullback. Okay, so right now I want to take my Fibonacci tool from the low to the high. I'm going to take it from here to here. Let's see. Okay, we see a very good reaction right here already. I am going to mark out this fair value gap right here. If price comes here, I'm definitely buying, but I think we are going to miss it right away, as this would be a very good entry right here. So, could I have traded this? No, it did not meet my criteria of my strategy, and that's okay. That's okay, right? You cannot win them all, and you are not supposed to take trades that are not inside of your strategy. I'm waiting for that 61.8 to be hit, so then I'm only taking that one. So now price is running up higher again. Let's see where it is going. We want to see that pullback happen somewhere anytime. Okay, maybe this is the high, so let me draw out my fib already from the low to the high to the current price lag. We want to see price come down to that 61.8 area. We are down at 61.8 area. It is inside of our time window that we can trade in. So we're entering on the fair value gap right here, low right here, stops above the high. So let's see, place the order, 1% risk. Next. Okay, so as you can see, there's a new fair value gap right here. We are just modifying our order like this. Bam. Let's see what happens. We are inside of the trade. It's going sideways a lot, and there we go. We are hitting take profit. So guys, this is basically the strategy. As you can see, we're winning almost half of it. It's around 40% win rate, but the trades that we win are just a lot bigger than we lose. That's why we are so profitable with the strategy. If you want to use FX Replay yourself, and if you want to increase your strategies drastically, then sign up with the link down below. Use code JORFX for 15% off your subscription. Guys, I hope you enjoyed this video, and I will see you in the next one. Bye bye guys.